It's interesting, if you look at the chart of the Nasdaq from the start of the year, there's been some big pullbacks when the rest of the market pulled back. They've continued and it's broken back past them, but the pullbacks have gone sort of smaller. It's almost got more consistent, which is sort of odd as you get to a later part of a rally.
The Nasdaq has built up a big lead and then sort of had these little gut checks along the way. Well, if you're right, yeah, it has not been an area where, first of all, the Nasdaq is about 30% 5 stocks. Not to denigrate what's going on there, but basically, if you have those 5 stocks in pretty good uptrends and none of them pulling back hard, the Nasdaq itself is going to be an outperformer. I think it's really represents a bull market that's acting like a bull market. The big glamour growth stocks, it would be unusual to have new highs and have those not participating. What you had today is a little bit of maybe softening of the trade rhetoric and have those fears dissipate a little bit. Means some of the beaten up areas like autos and industrials could have an excuse to bounce. And that's the way I view it today, is you had many things line up. You mentioned the weaker dollar and all the rest that kind of made it irresistible to say, okay, fine, I guess the bulls have the upper hand for now.
And Brian, to that point, I mean, as we pointed out on our air throughout the day, it's been pretty broad-based in terms of the gains today, and you certainly have seen more of a rotation into these cyclical stocks, industrials, materials, as this trade talk seems to soften, at least in terms of here in North America. Are investors being too complacent, or is this the move that you would suggest to folks that were looking to find out where to put their money right now?
Well, Morgan, it's a great question. We actually put out a piece last week looking at defensive stocks versus cyclical stocks. Remember, in August, we saw this move by short-term money trying to chase down REITs, telecom, and utilities. We think that is absolutely, positively the wrong move here. We think short-term money became too defensive. And quite frankly, this is a Brian Belski type day today because we're overweight financials, industrials, and materials and have been all year long. Those areas are the cyclical strong areas with respect to earnings. I think Mike Santoli told it best with respect to what's happening in tech. Those 5 big names are those types of consumer staple-ish tech that have such strong cash flow, such strong balance sheets, very consistent growth, are not the go-go tech stocks that everybody seems to think that the tech sector, is going to have some sort of a tech wreck again. So I think we're in a big, giant bull market. On days like today, we believe it. Tomorrow, who knows? But I think the NAFTA negotiations today is a major positive in the step in the right direction.
Michael, talk to me about your view on tech and the Nasdaq in particular. Does the fact that we have now crossed an important psychological milestone mean that we power on from here, or that people take some profits?
I think there's every reason to believe that tech is going to continue rolling. I know there was some big concern when Facebook had the problem with earnings a couple weeks ago. But if you look at technology companies, what are they really benefiting from? They are huge beneficiaries of changes in tax rates because of their high profit margins. And these are companies that are really at the next phase of the economy. Essentially, it's going to remake the economy. The news out of Uber today, which isn't so much tech, but just really is more of an innovation sort of space. I just think you're going to continue to see tech can be a strong player in the economy, even though Mike is absolutely right that NASDAQ index is really just a very limited number of stocks that runs the tables up. But I still think tech is really a place you need to be.
And Mike, we're in the final trading week of August. I think it's the best August for stocks since 2014. You know, September has always historically been the weakest for stocks. Do we expect that to play out again this year? Because it's been an unlikely year.
It's interesting, Morgan. You would think we're setting up for something like that, only because the S&P is up, 7.5% in 8 weeks. We've run out of a little bit of the momentum, I think, for the very, very short term. If you look at some trend lines, the market's kind of stretching the upper end of it. But last year, September or not, didn't matter. In fact, last year, the 3rd week of August was really when the market got liftoff. Of course, we were starting to price in a potential tax cut and all the rest of it. So seasonal stuff, it's tendencies, it's kind of these broad proclivities of the market. It doesn't really give you a tactical edge if you're looking on a given year.